Broadcast. Welcome to episode 36 of the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I am Joe Nikruto, and with me is
Dan Hussey, everybody. How's
as
it going,
always,
Joe?
Dan, going great. Welcome. Good to see you. Must be Friday.
Yeah, right?
Did you get some snow?
We did. Two inches or so, kind of a little bit out of nowhere. I guess not totally out of nowhere, but it was, oh, hello, lovely wife. Oh, that's all right. We left the binky in here, everyone. I got a 3-month-old screaming in the other room, and I was holding the only key to any kind of quelling that chaos. So
very nice.
But
very
yeah,
nice.
we got some snow, right? I guess it was a bit of a surprise in the forecast. I know we called for some freezing conditions and other stuff, but I definitely was not expecting as much as we got. That was a wintry mix I was not keen on having to wake up to yesterday.
Seemed like it caught everybody by surprise. Made my way into the city. Roads were just wet, and then all the news and social media posts of cars and trucks in ditches and splashed out all over the place and crashed out all over the place. You think, my goodness. But that was the first real accumulation, first real freeze, on the roadways of the year. And looks like everybody had to take a minute and remember how it works, huh? Slow down, folks. Dang.
Yeah, it's kind of funny. You saw these tweets or I guess X posts about how, the Chicago tracker for snowmobiles, I guess, or not snowmobiles, snowplows. You should probably own a snowmobile at certain times of the year in Chicago, but the snowplow tracker wasn't working. And I was kind of laughing because people were freaking out. And I'm like, well, first off, let's not all pretend like this is our first time, on the dance floor here in Chicago with a wintry mix. But also, do we really expect the snowplow app to work if the CTA bus tracker app doesn't work and all these other things? So, welcome to Chicago, folks.
I don't think the snowplows were actually working, although I did see some plows working later in the day, and certainly you could see where some stuff had gotten plowed across the border back in the Hoosier State, but apparently they didn't put any salt down in the northern part of the Hoosier State, and so maybe like decorating, you're not supposed to do that until after Thanksgiving.
Or Thanksgiving.
It certainly did begin to look a little bit like Christmas yesterday. I was walking through the city getting pelted in the face by snow, and I thought, oh man, what are you going to do?
I'm always okay for the first one, but after that,
bring
the spring,
Let's
baby.
Just move up Christmas. Let's jump into Christmas 2 weeks ahead, get it out of the way, and then get back to 80 degrees. Before we start, Dan, let's let them know that if they're interested in hearing about grain market movement and strategies daily, you can sign up for the Ag Hedge Hotline hosted by expert market strategist Ted Seifert, totally free, and gives you a chance to connect with us, you and I, if folks should have any specific questions about the markets or agricultural commodities in general. If you're interested in learning more about how this price action works and how to make price action work for you, it's a perfect way to take that first step. Link is in the description below. Sign up, totally free, zero commitment. Zaner Ag Hedge Hotline, right?
Yeah. Great place
news,
to get some
stories today. Let's jump right in. President details disaster relief for farmers and ranchers as part of a bigger package. So they're sticking, Chris Clayton from DTN is going to tell us they're sticking some sort of accommodation or rescue package for the agricultural community into some bigger pork-laden situation. But let's read before I start ranting. President Joe Biden is asking Congress to fund $21 billion in aid for farmers and ranchers as part of a $98.6 billion overall disaster package that the president proposed that Congress pass before the end of the year. In a letter Monday to House Speaker Mike Johnson, the White House detailed some of the country's needs recovering from natural disasters and economic challenges. The president cited a need to provide more emergency funding to help communities recover from hurricanes Helene and Milton, as well as other natural disasters. The White House Office of Management and Budget, the OMB, released a disaster assessment from different federal departments. Included was a letter from Agricultural Secretary Tom Vilsack to congressional appropriators without additional funding for programs like emergency watershed protection, assistance to local communities to clear debris and restore culverts, bridges, and other infrastructure will be delayed. In recent disasters, Congress provided additional funding to support farmers and ranchers with crop losses. Without this funding, uninsured producers will not get any assistance. For USDA, Biden proposed $23.5 billion overall, the lion's share of which would go to help farmers and ranchers who have suffered livestock or crop losses due to hurricanes, drought, and wildfires. USDA funding would also go to create permanent pay reforms for federal wildfire firefighters and support food aid for people hit by disasters and food banks that may have been affected by Hurricanes Helene and Milton. White House also proposed $40 billion to restore funding for the Federal Emergency Management Agency, FEMA, which has been trying to support recovery from the two hurricanes. Congress last passed a comprehensive disaster package in 2022, and as recently as 2017 spent over $120 billion in disaster aid following Hurricanes Harvey, Irma, and Maria. Agricultural groups overall have been advocating for Congress to take up a disaster relief bill under the $21 billion to producers. The proposal stated funds would reimburse costs for crop production, crop quality, and orchard tree losses, in addition to crop insurance indemnities. Payments would come under the Emergency Relief Program, ERP, though by the time USDA writes the rules for an aid package, the Trump administration would take over and write the rules and likely create a new name for a disaster program. So certainly
they just have to get political with it right at the end.
certainly a step in the right direction, right? I mean, we know farmers have been under duress, especially folks that have been hard hit by weather events and natural disasters. There's been a lot of drought. Now, a good portion of that area in drought in the United States has seen some relief recently by rains, with rains, but I'm not sure what that means to folks who have been suffering through that for months and months. So,
right. I mean, rains are timely, right? If you get rains when there's no seed or plant to absorb it, I mean, it's hopefully gets retained as groundwater until you need it, right? Otherwise, it's going to run off and doesn't help, right? At this time of year, certainly, right? It's better than not. But the big point here that I was, kind of takeaway was these are some huge numbers. The 20 some plus billion numbers for these disaster reliefs. It's great to see. Don't get me wrong. But it's like a drop in the bucket compared to some of the other numbers. Government spending hopefully can be, utilized in the most efficient way possible here, and going to the places it needs it, right? Because it is hard to justify when you think about taxpayer dollars going anywhere once you start putting big B's in front of it. But it's really hard to make an argument against using funds in this capacity in this country. And it's a bipartisan thing. So you hate to see any politics get involved here at all. And hopefully this is one of those things that can just be picked right up where it was left off with the last administration rather than having to tear it down and rebuild. But, we will see how these things happen.
100%. 100%, I agree. And I would say agriculture in the United States is a matter of national defense. It's a matter of national security. Folks don't talk about it that way often. Not everybody shares that same perspective, but it is absolutely true. Our ability to produce, harvest, distribute the very food stuff, the very stuff of life is a part of national security. And so to see the government recognize that and to see this at least getting some traction, to me, is always a great thing. Now, if we can see some government leadership on sustainable airline fuel, biofuels, and finding more export markets for the products that we so greatly produce, that would be another step in the right direction. Two other good steps in the right direction.
Export markets, being a great example and a leeway into our next story here about Xi and Lula elevating China and Brazil. If we could also get to our export partners that highly rely on these agricultural products and get them to help with some of this disaster relief. I mean, let's face it, if China is reliant and other countries are reliant on our production, if we can't produce it because of disasters, I honestly feel that we should be looking for assistance from abroad on these things too. Why doesn't China come in and help the United States when they're so able to help and willing to help Brazil right now? I would love to see some international trade relations go in the direction of, well, I'm not saying they come in and buy our land, but why isn't China helping us bail out our disaster relief? That's a question that I think could be tabled for another day, but it's an interesting idea of that maybe we're going about this trade war and trade tariffs in a little bit of a different way, right? If everybody needs us to be successful, help us be as successful as we can, is my point, right? And that goes on, that's across the table for politics in America. And our trade partners should start seeing it that way too, in my humble opinion. And to that
Certainly
point,
an interesting idea.
if countries like China and Xi are buddying up with our economic adversaries, because Brazil is not an enemy by any means, but they're definitely competition, right? Xi and Lula have elevated the Chinese-Brazil ties in a state visit over this last week. A story from Ricardo Brito and Eduardo Baptista from Reuters. China's President Xi Jinping and his Brazilian peer Luiz Inácio Lula da Silva said on Wednesday that they had raised statuses of their country's global strategic partnership during a state visit and a regional tour showing Beijing's growing diplomatic clout. Xi and Lula both said that the China-Brazil relationship had become a community with shared future for a more just world and sustainable planet. Well, Xi, if you truly believe that, we've got agriculture here in the United States that needs some help too. And a community expanding a key slogan from the Chinese president in a news conference at the presidential residence. The leaders signed a nearly 40 cooperation agreements to strengthen ties between the two economies, with more than 150 billion in bilateral trade. Lula said, and in other articles, also stated that there were agreements made between two countries for trading to be done for fresh grapes, seeds, sesame, sorghum, and a number of other, of course, grains. So they're expanding their help on other parts of the world. I would love to know why, when they rely so much on us for our agriculture, they don't offer the United States the same type of, diplomatic relations. It's a little offensive if you ask me, but hey, what can you do?
I hear you. How about, I tell you what we can do. We can look at the numbers.
That's right. And where we finish the week, which I don't know if you want to start off with corn, but the beach ball that can't be pushed underwater. Beans,
beans, maybe the beach ball that may be on the verge of getting smushed a little further. Yeah. Opened the week at 10.02.5, the high 10.12 3/4 in Jan beans, low 9.75 1/4. Last trade 983.5, down 15 on the week. Funds short about 67,000 contracts. We'll see what that is this afternoon. 973.5, the Jan contract low. You say we took out the March contract low, hey Dan?
That's correct. March had a new contract low there that took out yesterday, and yesterday it took it out, but today we also printed the contract low with today's low at 982.5.
10-day cross below the 18 in the January contract in the last couple of days. That's not great look.
Nope, not a good look either.
Heavy, or let me ask you this not rhetorical question. Is this if you look at this chart, it looks on a daily basis, it looks very heavy. Is it a heavy chart, or are we about to get down to where the buyer lurks? What can you say about that?
Man, that's a loaded question, right? Because I think both statements are true, right? This market looks like a technical selling opportunity for a technical breakdown lower, for a capitulating move. How far down that slide goes is the $1 million question. But there's been an unrelenting buyer here since August at this price threshold that has literally stopped the market from going lower, right? Until this point. Today and over the last 2 days, we've seen that maybe the first cracks in that floor starting to present themselves. And I do wonder if early and often next week, in a shortened week, holiday week for the U.S., if we don't see this market effectively capitulate, right? I think there is I hate to say it, but I do think the path of least resistance for the beans to go up is to go higher, lower first, and clear out the market, clear the book, make that very obvious low for everybody, and then rally like a rocket ship off of that would be, I don't know, the most clear-cut move the beans could do. So
put a number on that low.
Yeah. How far down can we go?
950?
I think 950 would be your first natural stopping point. But given that the range we've been in has been from 970 to about $11, I can't discount that this market might have the ability to strike $9 if it to the low end, right? Going much below 9, I think you're starting to push it in this type of environment. And certainly when you even take a step back to the monthly charts, going back to 2000 lows through the 2012 and even through the 2000 teens, there's a big trend line support, right? Or, coming in around this $9.50, $9 area, depending on how you draw that monthly chart. And the same could be said for corn, just below the $4 figure too. But markets have in a real way had a major pullback down into levels that you could start to make an argument where there's value down here. But we certainly haven't seen participation in terms of the market reversing that suggests we have a low yet, right?
We probably need lower prices to find that reversal
and that's the big C word, that capitulating moment that I think this market needs. We've spent since August effectively flagging at lows against these levels. Yes, we had a relief rally into September and the start of October, but generally speaking, the market has just come back down to this area, and it needs some resolution. We need let's have let the fat lady sing, so to speak, right? And I feel like that's the moment I'm waiting for.
Palm oil is kind of rolled over. If you look at a chart of bean oil for January, I got a weekly chart in front of me, and my goodness, we opened the week at 45.52. The high was 46.18. Low was 41.51. Last trade 41.84. That was down 365. Funds came into the day estimated to be long 64,000 contracts. But if you look at that chart, so where did we came from almost 50 down to just below 42. That is a heck of a reversal.
The entire oilseed complex, is getting hit here. In the big leader over the last several months has been palm oil since its lows in August. But that chart has very much topped out. We're now below the 18-day moving average in palm oil. Reversal signals have tripped off, where the most bullish in the oil seeds has now reversed and potentially started to unwind a major move higher. You've seen canola also get hit pretty hard over the last week. Started the week, it was up around the 660 figure, now breaking below the 600 in the Jan canola. And as you pointed out, oil couldn't get it done either, and has reversed most of this week's losses or gains, or last week's, the previous week's gains have now been reversed and are now becoming losses. And that seems to be weighing on the entire bean complex as well.
From a quick look at this bean oil weekly chart, I noticed that you've got kind of a head and shoulders bottom-ish kind of thing. That. And you're coming up to that shoulder now here below 41.80. That 40, I don't know what is that, like 41.78 or some such there. If we get through that shoulder level and we start taking out that head formation, that's going to be a pretty powerful signal that the path for bean oil is lower. I would think that's going to have to play out over the course of a number of days, of course. And I would guess too, the converse has to be examined, is that if we do hold this level and head back up, maybe there's something there. It's hard for me to talk about bean oil strictly technically with the kind of with the way the fundamentals are splashing around, right? Palm oil, the challenges with that, the potential for either movement forward on biofuel or changes in ideas as a country and a government about biofuel. It's a big moment in time for the bean oil.
And those things those things should happen and create more demand and arguably drag prices higher as things develop. But we also want to remind viewers to not get lost in the SAF discussion and debate, because this is not something that's going to happen overnight. And it's not, immediately going to create demand where there wasn't any, without the infrastructure, without the investment, without the proof of concept for an entire industry to shift over, right? It's sitting there. Absolutely. Neither one of us are sitting here saying it shouldn't be done, but it takes time.
We have the commodity, we have the demand. We just need to figure out the middle part.
Exactly, and that's where that's where we've seen some very positive strides of the last year.
How about wheat? Opened the week at 558 and a quarter in March wheat. The high was 577 and a half. Low 554 and a quarter. Last trade 564 and three quarters. That's up 10 and three quarters after last week's shellacking. Wheat trying to gasp for some life, up 10 and three quarters. Funds are short, 43,000 contracts coming into the day. 10-day at 564. Stopped by, when I wrote this, stopped by the 18-day moving average.
Yes.
Maybe a real technician would rephrase that and say traded to the 18, but it looks to me like that 18-day, like a baseball bat, waiting there at 575 and 3/4 because we closed at 564 and 3/4.
Agree.
I think, and I don't have this written down, and I know this isn't very scientific, but it feels to me like the Russians are going to run out of wheat. They're trying to shift the focus to U.S. weather, and certainly that has changed. You got some moisture in areas where it was very dry, but boy, I don't know. Seems like the possibility for higher wheat prices is on the horizon, but it's hard to get there after looking at last week's price action and decent price action this week. We'll need, in your opinion, let me phrase this as a question. In your opinion, where would you need it technically to say, oh, that does look good?
Very simple, actually, question. The December's going off, so I want to see it get back above that 560 in December. But let's focus March here. 580 on March. Until I'm below 580 in March, I think this is still a sell, a downtrend, and the up a few on the week, I think, is going to be the reason we end up heading lower at the end of next week, by the end of next week. We saw increasing volume here today and a stabilization of that volume as we're starting to actually roll over. It wasn't a lot, but it's like they're trying to do something there. It feels like we're also in the midst of the end of life of contracts for those Decembers. So things are a little funky. And today being also the December option expiration, I was a little shocked, just to put another point out there, that we didn't see more volatility or didn't see more of action in today's price action, knowing that all of our December options have now gone off, are going off the board here. It was a very muted
felt to me
day.
like they put it right where they wanted it, and that's where it stayed. You know what I mean?
They got it to levels.
They got it to the expiration 100%. Levels where it was going to stay, and nobody was going to sway them. And that's fine. Option expiration, forces at work on option expiration. We've all been doing this a long time. And I think that's the
only takeaway you can, Joe, with that comment is like, well, if you didn't get the volatility that was maybe expecting, it's because markets thought they were right where they should be, right? And that's exactly what I feel. Now, to that point, this last week in the rally we saw in wheat was right up into that 18-day moving average. It was also, unfortunately, right up into the old support around the 580 figure that we had held since October 25th for a 2-week period until November 12th, where we finally broke down. We simply, in my opinion, rallied up to test old broken support. Now is resistance in the wheat. There's a downward sloping trend line against the highs since September. That 18-day moving average that comes in right at 575 as well. We got rejected right where you don't want to see the market get rejected if you think it's going higher. That's all I have to say, really. And now if we roll over and we're taking out the lows, I think wheat too, just like the beans, would be heading towards that capitulating moment to finally give us a low where we could say to ourselves, oh yeah, that's it, if we're going down, which unfortunately, it's my opinion that I think we are still in that downtrend. Even though fundamentals are turning, I think that's a signal that we're getting really close to the bottom if we're not there already.
And it's hard to make a bullish technical case. If you covered up the wheat part of this chart with your hand, you would say, oh, that looks terrible. I don't care what that is. Chinese silk cocoons, cryptocurrency, ETF, whatever it is, It's going lower. But then you look at this and you think, okay, moving averages, all of them pointing lower. Price action, all below any kind of consolidative area, almost below all of the moving averages. I think we're laying on the 10-day, right? In March. And that's nothing to me, in my mind, that's nothing at all. So I think what we're going to have, and you would think, well, okay, next week it's a holiday week, right? Thanksgiving on Thursday, muted trade certainly on Wednesday, muted trade certainly on Friday. But folks who are watching wheat may have to show up and pay attention for the first 2 or 3 days and the 2 bookend days afterward, because there could be some fireworks. This chart sort of says we're moving one way or the other, and I doubt that we're going to take 4 trading sessions off of price discovery is what I'm trying to say.
I completely agree. And next week's going to be really interesting too, because they left, in my opinion, this Friday so muted. It was the day they could have broke beans so heavily, and they didn't, right? But they kind of left it right at an area where if they wanted to next week on the open, they could, right? Same thing with wheat. They started to roll it over for 2 days here off the highs, but we're still up 10 cents on the wheat. Corn's just being corn up here. I still can't. Corn just makes me laugh. I mean,
opened the week at 434 3/4. The high was 442 1/4, low 433. We're talking March corn. Dan, last trade 435. I can barely read my own writing. 435 and a quarter. Interestingly, is that even on the week? Is that a weekly doji? Shout out to Adam.
Yeah, I had not even looked at it on the weekly, so I'm going to quickly throw it up. But yeah, just about, right? I mean,
funds are
it
long about
opened the week-
98,000 contracts.
Yeah, within a penny of it being a doji for sure.
How about that? Doji-ish. Unknown. Karen Braun posted yesterday saying, take a look at the unknown amount, and that is corn that export intentions, right? So help me find the right word on that. Potential exports that have no shipping destination.
Yeah,
So
the unknown destination in the daily
category,
flash
right?
sale, right?
There you go.
They are under, unfortunately, you're under no legal obligation to declare who you are when you're buying over 100,000 metric tons of corn, but you do have to say, well, within a few days.
Until you're going to put it on a boat, right?
Correct. Eventually, once you take tender of it and it's on a ship, what they call, free on board or FOB, you actually have a customs declaration, so you know exactly who's got it. But they
switch
legally,
it out.
Correct.
Of the unknown, they switch it out of the unknown category. And she mentioned also, watch out when you see these negative numbers. Sometimes that's switching out of unknown, and it's not horribly bearish. It's actually they're just telling you where that
who
corn's
actually
go.
did the business exactly.
And so the question is, who is this unknown buyer, and why are they why do they want to be incognito? You know what I mean? They're hitting the incognito button on their corn browser, and I don't know.
It's funny. It's one of those things where if it were a life and death situation, I think we all know who you'd say, right?
Well, and that's what the talk was on the internet. I thought, I don't know if I saw this on Facebook or where I saw it, but they were saying, no, it's not China, it's somebody else. But I find that hard to believe.
Then it's Japan or Mexico would be my humble, right?
Yeah, right. There you go, for sure.
But true.
But I bet $1 it's China. So 18-day moving average 435-ish, 15-day moving average 433-ish. We closed on the 18-day at 435 and a quarter. I don't know. Corn certainly seems to be gathering steam for something, right? Yeah. Are we breaking up? Or are we breaking down?
Completely right. When you look at the trade since September, we are right in the middle of basically a wedge. And, because we have headed lower in the corn, since January of 2023, this looks like a bear flag for all intents and purposes, or a wedge at the bottom. And a technical trader does consider, could it push through and continue lower? If that's the case, we probably have a downside target at around 380 on March corn from that kind of wedge structure baking lower. But just because it's a wedge doesn't mean it's going lower, right? This is clearly a fight over the trend. You've got opposing forces both fighting each other, and the market can't go anywhere, so it consolidates. Above 440 now in March corn, and that downward sloping trend line would very likely open the door towards that 200-day moving average around 453. And truthfully, I don't see much resistance on the chart above there until you get back to that 470 area where, effectively the market sold off last summer and broke down, from levels that we have not returned back to. This wedge could go either way for me. I've been impressed with how well corn has held up in the face of selling pressures from both wheat and beans over the last couple of weeks. Somebody doesn't want corn to go down. And regardless of your opinion of which way it should go, like the beans acknowledging the fact that they've been holding it up above those contract lows from the summer, corn has been resilient in the face of that downward pressure.
Fundamentally, I would suspect that end users are not covered, and that if this begins to rally, end users may have to chase it. We saw, and I think you and I referenced this last week.
Particularly with the cattle price running up, right? If you're a cattleman and you're happy with the feeder and fat prices you're starting to see, well, I got news for you. There's something else that you can get dragged up when you start getting more on feed demand, which we're expecting to see here, right? We have light herds in terms of number. You increase that, typically you can talk about the inverted correlation between corn and cattle and all this, but we have a fundamental development in cattle that demands more feed and more mouths to feed. It's not exactly a bearish situation for corn.
And the fund development last week where it came out that they were long 100,000 contracts.
100,000.
Somebody put on somebody put on another 10,000. I think it was earlier this week. I can't remember if it was Tuesday or Wednesday, but just a big chunk of fund participation in the corn market where they were mildly short for the previous 2 weeks. And then all of a sudden, so I keep coming back to that 100,000, and I cannot remember, Dan, when the last time was I saw that. And that isn't getting a lot of traction. I see some commercially connected analysts beginning to spin that 100,000 contract long fund position as a bearish fundamental, and that it could present some resistance if the funds decide to come out. But I remember as the market was moving lower, we thought, okay, well, this giant fund position should slow this downward trend, and it did not.
Right.
And so I wonder,
as they got
100,000 contracts, right? What's 100,000 contracts to the funds these days? You and I say, oh my gosh, 100,000 contracts, but they could easily throw
price action in corn completely agrees with you, Joe. I mean, we went from a massive short in August to now being long 100,000. Corn's moved all of 20, 30 cents in that. I mean, that is not what I think a lot of analysts, including myself, expected when we were going to get that unwinding of the big short position from this summer that we had across the row crop spectrum, right? I was expecting corn all the way back up to, 480, whatever. It was rocket fuel, as we all thought. They got a lot of business done. They got completely flipped their position from a net short to a net long, and they did so without really moving this market a whole lot. I almost don't agree with the idea, or don't disagree with the idea that this market is starting to get overbought and hasn't gotten overbought in the position, but not overbought in price. And that is, in theory, a bearish development. I don't know. The funds were really right about their short this summer. Are they about to be really right about a long too? And how much longer can they get, right? Is 100,000 a small position for these guys? Can they push it to 200 or 300 on the long side? Nothing's stopping them.
That's the question. Right?
Nothing's
That's
stopping
the question.
them.
If they're coming for it, they certainly have the bullets. And,
they
as
have
you
the
look
deep
out
liquidity
across,
pockets. They've never had more money in cash flow in terms of hedge funds ever before now. So when they want to splash the pot, it's a big splash. It's a lot bigger than it was 5-10 years ago.
export program is robust. We've managed to affect these exports with a river that was not full. I would guess that river levels are more than adequate now, but we did all of that export business under duress. Right?
Ironically, we're now heading into the freezing temperatures part of the cycle.
Right. We'll see. Yeah, we'll see how that works out.
We'll start talking about them freezing locks and infrastructures.
But it seems like we've been here before, you and I, looking at a chart saying, my goodness, I don't think that we'll be here in a week or two, right?
This is very reminiscent. Corn is very reminiscent of wheat a week or two ago, right? Where it was just sideways, and then all of a sudden you're just like, okay, it's going somewhere. We just don't, whichever way it's going. And sure enough, resolution.
How about a quick look at the cattle complex? Jan feeders opened at 247.47 and a half. The high was 255.35 and a half. Low 246.65. Last trade 254.30.
Wow.
All to say, Jan feeders up 7+ full points on the week. Holy moly!
And it was like started the week and just didn't stop. They came into work on Monday morning and didn't quit here until Friday at the bell. Wow.
Feeders and leaders has to be referenced, right? I mean, my goodness.
There's a reason we say it, right?
Right. I would say so. Dramatic price action in the feeder cattle. But live cattle opened 183.05. High was 187.30. Last trade 182. I'm sorry, low trade 182.95. Last trade 186.77 and a half. Up only 382 and a half on the week. While that is substantial, doesn't seem like as much. But that's, I guess, what we would want to see, right? Feeder cattle, guys are willing to pay all of a sudden for these feeders and maybe making big bets about the future.
Yes, absolutely. And now you're starting to see confirmation of the fats follow higher, right? That was something we weren't really getting back in September, right? When the markets had kind of started to get a little toppy. We noticed that there was a hesitancy of follow through there. And arguably the fats had tried to break out in the end of October. They couldn't. Both feeders and fats saw their last pullback. And then here to start November, man, feeders breaking out of a very technical downward sloping trend line that's been on the charts. If you look at that in the Jan feeders, it's been a trend line since February of 2024. for early this year. And breaking above that 18-day and that trend line, it just became a technical short squeeze and breakout run higher. I mean, anyone who is selling the fats or feeders and fats since October, that's now, the stops that are getting targeted and run now. And the market's rolled up to this above its 200-day. I wouldn't be surprised to see the fats follow through, given the type of demand. And if anything, maybe the fats were waiting for the feeders to finally do this to open up, the whole cattle complex to this rally at the end of the day. And now the big question is, will we see a new contract or all-time high in these markets?
I cannot dispute the technical read on that. That is right on the money, but I'm still nervous about price in fat cattle. I'm still, even though I'm looking at these charts and these charts look terrific, right? So these are great technical moves. Now you need the fundamentals driving this market to show themselves. In order to keep these fats up here, you're going to have to be able to move this meat into the domestic market, into the export market, and it has to. You know what I mean? It isn't like corn. They're not going to be able to put it in a bin. You have to get it to the customer, and they have to be willing to pay for it. And I wonder, I can't remember who it was. It might have been Chris Lehner from ADM referenced. If you keep seeing these the cash price of beef erode, and cash price of beef does not go along with this, packers are going to try to make a move on this market, and it's not going to be nice. And so I don't know. I'm still a little concerned. I'm not a little concerned.
To be fair, packers have had incredible margins for the last year. I think the economy and markets generally don't allow that to happen forever, right? And this is the natural movement of that. Beef cutouts have been staggering prices for a year now, and really, we didn't even see big drops when cattle prices collapsed there over the summer months during the avian bird flu.
That's absolutely true.
Beef cutouts have been pushing the 300 mark for a year now, and now I feel like the cattle complex is finally coming up to put a squeeze on the packer margin, because at the end of the day, you can't be too profitable for any one side of an industry. Otherwise, right, you're gonna kill your golden goose, so to speak.
For sure. So we'll be watching. I think everybody that hears this is watching these fats very carefully, and maybe still looking for a level to establish some sort of floor. Because if it does fall apart and you didn't.
Well, and I'll tell you, like, rallies like this offer, and this is just a perfect opportunity for a PSA for any market, right, that you have commodity exposure to that is running up like this. We get caught up in the greed factor of always wanting a penny more, a dollar more, and having that, we want that contract high again. But don't lose out on the opportunity in the idea that every tick we inch higher is an opportunity for you to put a floor a little bit higher on this market. And there are definitely strategies out there that Joe, myself, Ted, we can walk you through to show you how you can use this opportunity to your advantage to create a floor for your balance sheet. And honestly, keep your upside open, because why would you step in front of this freight train in this type of environment is the question everybody asks me.
That is for real. Dan, Zaner MarketCast. The Zaner MarketCast will be on holiday for Thanksgiving. We'll be back in the first week of December. I think that's December 6th for episode 37. I think we want to wish everybody that we know, all three
Absolutely.
or four. We have four viewers now. Four viewers. Happy Thanksgiving. Hope everybody is safe. If you're traveling, right? Do you have to travel anywhere?
We are. We're heading to Denver to visit my whole family that's relocated out of the side of the state of Illinois. With the exception of my parents and one sister, I've got three sisters now living in the Denver area. So we'll be heading out west for a little bit of Rocky Mountain High for our Thanksgiving break. You,
the lovely Mrs. Hussey, and those two children are going to board an airplane.
Yes.
That's incredible. All right. Well, that's great. Better you than me. But you guys always do such a great job on plane. You got it down. It's no problem.
We got it down. We got it down. You got to get on. Young parents, hear me now. Work the system and get on that plane, especially if it's Southwest Airlines first. Get that bulkhead seat right in the front, because now your kids have a little play area to run around while you're sitting there blocking them off from the rest of the plane.
Love it.
Yeah,
Love
put a
it.
blanket down or something so they're not on the floor. Yeah, we're not like gross people, but believe you me, that is the only life hack I can pass on to our viewership.
That's a pretty good one. Don't let them touch the door handle, Dan.
But yes,
If you
happy
could,
Thanksgiving to everybody.
happy Thanksgiving, everybody. If you could, Carter has a question of the week. If you could question of the week. If you could rename yourself, what name would you pick?
Maverick.
That's a good one. Yeah, you'd be Maverick Hussey. Yeah, I don't know.
I mean, how can you not be Joe?
Yeah, I think
Joe is iconic.
I'm a good sport with all the rest of these questions, right? I think that I'm going to refuse.
How can you not be Joe?
Yeah, I am going to say no thanks. I'm just going to keep Joe. How about that? If I could rename myself, I would not. That's what I. If I could, I would ditch that day and say no thanks. So here's what I would say to honor my father, who's certainly fighting the good fight right now. My middle name, and this is, for years and years, everybody would mock me because my middle name is Eugene. But that's I know, right? That's a good one.
It's not like Aloysius or Beatrice, but Eugene's pretty good.
Close. Yeah, pretty close. But so that's my dad's first name. He's Gene. So maybe to honor my dad, I would switch it around and be Eugene Joseph II. But I kind of like Joseph Eugene too. So
for sure.
All the best to everybody for the holiday. Dan, what else do we have to say?
Just thanks for listening to us today on the Zaner MarketCast. If you need more, because you can't just get enough, do follow us on Facebook at Zaner Ag Hedge or on Twitter and LinkedIn at the Zaner Group. If you have questions you wanted asked on this show, there's a link provided. Go ahead and submit those right to us to get them answered right here on the air. Excuse me. Thank you again. And be sure to like, comment, and follow the podcast and not miss a beat. And we'll be back with you all as price action develops. Have a happy Thanksgiving, everybody. And we will see you all when December comes rolling down the pipeline.
Thanks, everyone. Happy Thanksgiving.